Hello everyone, in this video we are going to redefine order blocks. I'm going to show you why some order blocks you were using for taking trades are not working. Now, if you're trading the smart money concept, you need to understand that order blocks are very important institutional reference points, but understanding how to trade with an order block is also very pertinent. So let's get into the video. I will show you how to properly use an order block for trade entry and how to filter out good and bad order blocks to stay away from bad trades. So let's get to it. Starting from this particular picture, I have these three scenarios just for us to understand how to spot the right order block. I have three pictures right here, scene 1, scene 2, and scene 3. All the scenarios here are in a downtrend, and I'm going to show us which of these ones are bad order blocks that we shouldn't be trading and which of these ones we should be looking for whenever we are trading with an order block. So what exactly is an order block? From the word order and block simply means a very huge and massive transaction. These types of transactions are actually done by bigger players in the financial market, whether in the crypto market or forex market. Now, we can literally see such kind of transactions depicted in a chart, and we can use such kind of levels as a memory because price will always come back to such kind of levels where the institutions have literally entered the market, and price literally react in such kind of levels. So looking at this, you can learn more about an order block in this particular channel, in this particular playlist of the videos you're watching. The first scenario, we have seen that price has been coming down and then had a retracement. This is a downtrend, and it broke structure from here and pushes down to this level. So if you're looking for your order block in this particular downtrend, is first of all to mark out the last green candle that printed before the downward movement. This green candle that printed before the downward movement is your bearish order block. Now, marking this particular green candle from the tail to the body will now help you to see an order block. So normally, if you're trading the smart money concept, you wait for price to come back to this particular order block, and then you will sell again to make profit. But in some cases and some instances, this particular green candle may not hold price. It may just react around this level and push to the extreme. That is this green candle. To some people, this last green candle that printed before the red candle will be their order block. But let me show you why this is not correct. Most people will use this green candle as their bearish order block. Now, forget about the color of the candle, whether it is a sell candle or a buy candle. The last candle that printed as green here, we can see that before this red candle printed, price actually took the high of this green candle before forming the red candle. So anytime we see the high of the last green candle being taken out by the red candle, we don't use the green candle as our order block. We use the red candle as our order block for trading. Now, this is the reason. Sometimes price may come over here and push above this green candle. Most of the time, if you enter trade, your stop loss is normally above this level, just a little bit above this level. And then price sometimes may even push above it and stop us out before moving in the direction of our prediction. So this green candle in this scenario is not our order block. We use the red candle as our order block, and you can see that the red candle pushes down to this level. Sometimes price may not even reach the green candle before reacting in this level. So when we are marking our order block, this red candle is our order block because it took out the high of the green candle. Vice versa when we have it in the downside. So let's go to the second scenario and see what we have right here. Look at this. This green candle is the highest that printed. It took out the high of this, and then the red candle never took out the high of it. So we can use this green candle as our bearish order block, which is a good institutional reference point. This is a very good type of order block that we can mark as an order block. And then the extreme, which is this one, the high of this green candle is actually higher than the red one. So the green candle is now our order block. And if we are marking an order block, we will mark from this tail to the body. The entire candle is what we will mark. But this order block is still not a valid order block. Why is it not a valid order block? Because there is no imbalance. What is an imbalance? Let me show you literally. The low of the red candle and the high of this particular candle have already connected with each other. We want to see that the low of the order block and then the high of the next third candle that is in a 3-candle price action not connected to each other before we can have a more valid order block. So this particular scenario, this order block is not a valid order block because it has been mitigated. You can see that the low of this red candle and the of this red candle have connected to each other. So in a 3-candle price action, we want to see that this low is not connected to this close to the order block before we can say this order block is valid and it can give us the kind of trade we are looking for. Price may not necessarily go back to this order block because it has been mitigated already. There is no massive order in that level for price to move on. Then we go to the scene tree. We have this as a genuine order block that we can take trade from, and then this as a genuine order block because we have an imbalance. The low of this candle is not connected to the high of this particular candle. That is in a 3-candle price action. We want to see 1, 2, 3. This is connected to this. That gives you a healthy price action. But anytime you see that this is not connected to this, but anytime you see that this low is not connected to this, that is not a healthy price action. That is if you're looking at that order block as your trade entry level. So let's go to the chart and see. Now coming back to the chart, let's start to spot some of the order blocks we can actually mark. I actually mapped out this particular order block. Let me show you. If I remove this particular drawing, you can see that from this particular chart, we have this last green candle that printed before this red candle printed out. So if you're looking for an order block in this level, this will be your order block because it has the highest level and nothing else traded above it. So this is your order block. And then what next did we see after seeing this particular order block? We can see an imbalance right close to it. Look at it. This is an imbalance, okay? So whenever we have this kind of price action, okay, an imbalance, we can literally say that this is the most valid order block for us to use. And look at what happened. Price never printed above it, even though the tail came to this level, but the body never went above the green candle. So this is the type of order block you should be trading. They can give you a high probability trade entry. You can look out for market shift in the lower time frame and take trade from here, and then it comes down because this is the highest candle. And then nothing took out liquidity above that. So we can see this even here. Let me show you. Look at what I'm saying. If you look at this, are you going to map out this entire red candle as your order block? Definitely not. Why? Because we can literally see that this other candle is lower than it. Look at it. It took out the low. That means it took out liquidity below this level. So this green candle is our order block. It is not about the color of the candle. It's about liquidity and the levels this thing went to. Look at it. Price came back. Even though this particular order block has been mitigated, look at it. It has completely been mitigated. We have this, you can see this fair value gap. Price has traded through it. Look at this fair value gap. Price have actually traded through it. So it has been completely mitigated. Price came back and then retested this order block and started going up. In the future, price came back, tested the same order block and pushed up. Okay. So looking at this, you can literally see the beauty of knowing the right order block. Now, let me show you another very important level. Look at this. If we are mapping out the last green candle based on color as our order block, look at what will happen. Price actually traded above it. Okay. Price actually traded above the level. It completely went above the level. But look at what happened here. If you are looking at the highest candle that printed, look at it. Price was actually reacting around here, around this red candle that last printed, and then it came down. So if you have mapped out this order block as your order block and you put your stop loss just above here, you could have been stopped out here. So you need to know exactly how to spot your order block, why that particular order block will not work. So if you have been trading order blocks before and they are not working, this might be the reason why such kind of order blocks are not working. Look at this, what is happening here. Which of these ones is your right order block? This is the right order block. Why? Because it is the last candle that printed above, okay? and then we have an imbalance in between. Even though the imbalance has later closed, we can see that price actually closed the imbalance. There is no imbalance there, but price came back to the level and reacted. So you want to see an imbalance close to the order block before you can have confidence in the order block. An imbalance is simply fair value gap. Look at what is happening right here. If I show you this level, look at this level. If you are looking at this small green candle that printed as your order block, okay, look at this. If this is your order block, price never came back to the order block. Price never came back to the order block. But what if you are using this one, because this red candle printed the highest candle, and then if we are using it as our order block, we want to see that price comes to this particular level. This is why I'm telling you that sometimes price may not even go to that level. This is the order block price is using because it is the highest. It took out liquidity above the last green candle that printed before the candlesticks. And then you can see an imbalance right here. That is a fair value gap. Let me take out this so you can see it clearly. This is a fair value gap, okay? So we can literally see it. And then price came back to fill the fair value gap just to test it before pushing down again. So this is really, really important for you to understand how these things work. If you can see this, you would be able to filter out a lot of wrong trades you're taking because of order blocks. I really love to trade with order blocks because they really give me the kind of trade I'm looking for. You can make a lot of money with just an order block. I am telling you, you can make a lot of money with just an order block. Look at what happened right here. The last green candle that printed was this guy, okay? If we are using any other candlestick here, we can see that we have a lot of trouble finding the right order block. So this is our order block. If we map it out, we want to see price actually reacting around the level, came down to this level. So we can see a lot of them on a chart. This our candlesticks, we can see them price reacting around the levels, nothing push above it. We can see them. Let me look out for another order block in the downside this time around so we can have a literal understanding of how that works. Look at this. Price came. This is our lowest candlestick, this level. This red candle is our lowest candlestick, and we saw price actually came. So we have it right here, but it has been mitigated. Price came back and filled it up here, and we don't have a fair value gap that we can literally see and say that this is our fair value gap because price has been mitigated. So we don't want to trade this kind of order block because it has been mitigated. Sometimes it may not give you the best trade entry. It has been mitigated. Look at this. This is your order block right here. This one is your order block because it is the highest. But what next can you see? You can literally see that it has been mitigated. We don't have a fair value gap there. So it is not a strong order block that we should be looking for. So it is not a strong order block. Most of them have been mitigated. This one, you can see a lot of them on a chart. Let's find some more example so you would be able to filter out some bad and good order blocks. So look at this now. Okay, look at what happened. This green candle, can you see that this red huge candle is higher than this green candle? Okay, and then price never came back to this green candle. Price never really came back to this green candle. If you should map it as your order block, you could really see that you'll be disappointed. Okay, price never came back to that. After breaking structure here, price moved straight downward, and then we have an imbalance. It just reacted around the red candle, which is the right order block. Now, if you are seeing a very massive order block, this is how you should trade it. You can use your Fibonacci tool and measure the entire candlestick, okay, from the high to the low, from the high to the low, and then use the 50% level as your main threshold. It is called the main threshold. That is the level you can use for trade entry if you have a very massive order block. So price actually came to this red candle, which is the right order block, and then reacted from there and started coming down to this level. So you can see why I said you should look out for the right order block. You can see this one is higher than this, and then price had to come back to this level. not only to the red candle, because the green candle is higher than this. So when you are looking at this, you can literally see why some order blocks may not work, why some order block may work literally. This, you can see at this level, this order block has been mitigated. Let me show you. If you can see this red candle, it has been mitigated because price actually filled up the fair value gap that was there, which is an imbalance. That is why price never came back to it. It just pushed up to that level and then reacted around this level, around this area, then started going up again. When we have this kind of movement, we don't want to see price coming back to it because there is no imbalance. That imbalance is what makes the order block really, really valid for us to take trades from. Okay, so you can see a lot of them. Just try and spot them and check the difference before you can use them for trade entry. Okay, we can see that this is our order block, and then price actually came back and tested it because it has a fair value gap attached to it. If we can adjust this guy, we can see literally that it brought back price to that level. Price actually came back and tested it. It has a fair value gap. It has been filled up before price push up to this level. Look at this one. Okay, this one is not your order block because this one took out the low. Okay, so this is your order block. Price came back and reacted around the level and push up. It has a fair value gap. This is our order block. Everything I'm showing you here is from experience, guys. I've been trading order blocks for a while, and it is one of my major strategy, and I've seen how beautiful it is. Over time, I've learned to use the right order block. Not theoretical knowledge, it is actually an experiential knowledge. If you look at this, you can see an imbalance. Okay, this is an imbalance. Price came back and filled up the imbalance, touched the order block, and then came back, touched it, and started going up. So guys, this is actually how to use an order block for trade entry. I hope this video is really helpful to some of you to be able to know why some order block don't work and why some work. Look at this. This is your order block. Price came and tested it and then started going down again. Let me map it out very well. And then started going down from that level. So guys, this is all about this video. Make sure you give this video a like, and if you have any question, this is your order block, let me know in the comments. I hope this video is really, really helpful. Look at this. Let's do this last one. This is really beautiful. This is your order block. This small green candle is your order block. It's not the red candle, and this is why price has to come and touch it. And you can see an imbalance right there. You can see in a 3 candle price action, we want to see that the high of this candle is not connected to the low of that candle to form an imbalance in a live market. So guys, this is all about this video. Let me know in the comments if you have any question. Thank you for watching.